In section 16-2, we're going to prepare a statement of stockholders' equity. This is specific to a corporation. We would not prepare a statement of stockholders' equity for a proprietorship. So a statement of stockholders' equity is a financial statement that shows the changes in a corporation's ownership for a fiscal period. So we are going to be using information from a few different places. The income statement, we will need the federal income tax numbers, the net income. We will need capital stock from the ledger. And then we will need capital stock, retained earnings, and dividends from the adjusted trial balance. So 3 separate places where we will find our information. So the par value, this is the value assigned to a share of stock, and it's what's printed on the stock certificate when you purchase the stock. It tells you how much you paid for it. So when issuing shares of a stock, a corporation can assign any par value allowed. So that's typically going to be based on the value of the company. The more your value your company has, the more you could charge for the stock. So here is the first section of the statement of the stockholders' equity, starting with the heading. So we have our company name, followed by the name of the statement, and then the date. So the capital stock section. So this is where we will talk about the stocks issued to owners. So the stock at the beginning of the year, 7,000 shares issued, times our $10 par value, gives us 70,000. Throughout the year, we issued 500 more shares at $10 per share for another 5,000, giving us a balance of $75,000 of total stock issued. Next up is our retained earnings section. So the retained earnings is the income from one period that's rolled over to the next, or retained. So we'll give a balance here in the instructions. Then we will need to go to our income statement to find our net income after federal income tax, less our dividends declared coming from the adjusted trial balance. Subtract that, gives us our net increase in value for our company for the year. And we add that to what we started with, $75,000, plus our net increase gives us $130,000. Our total stockholders' equity then is $205,115.41, which is our stock that we've issued. So people have essentially contributed $75,000 to our company in the form of stocks, plus our retained earnings. So that's the earnings from previous years rolled over, plus the earnings from this year, gives us our retained earnings. And that is the value of our company. And that is section 16-2.